Good day. Today we are going to focus on the cash budget. So we are saying from the list below, choose the words that best suit the description given. Only write the words next to the questions. Okay. Then they are saying 4.1.1 estimated future receipts from customers. Which one is that? That is a debtors collection schedule. You need to remember the reason the business prepares the debtors collection schedule. It is to see the expected receipts from its debtors. So this is it. So 4.1.1 is the debtors collection schedule. And then 4.1.2, an item that appears in the projected income statement but not in the cash budget. Remember, in the cash budget, we only include the cash items only. And then in the projected income statement, we include the incomes and the expenses, whether it's cash or non-cash, but we include the incomes and expenses. So here we're talking about what? The discount allowed, because this one, it does not belong under the cash budget because it does not involve the movement of cash. Okay, 4.1.3, indication of whether there will be sufficient inflow of cash to be able to support expected payment. What is this? This is a cash budget. Remember, in the cash budget, the business prepares the cash budget in order to estimate the future payment and the receipt, or it prepares it in order to estimate the future inflow of cash and outflow of cash. So how will the cash leave the business, right? So this one is a cash budget. Cash budget. 4.9.4, indication of future revenue and expenditure. So revenue here we're talking about the incomes, and then expenditure is the expenses. So indication of future revenue or incomes and expenditure, this is the projected income statement. This is a projected income statement. Four point 1.5, expected future payment to suppliers. Expected future payment to suppliers, this is a creditor's payment schedule. Remember, the business prepares the creditor's payment schedule in order to see how is it going to pay its creditors in the future or its suppliers. So let's go to 4.2 now. The information relating to the budget period from 1 September to 31 October 2021. Okay. 4.2.1, prepare the debtors collection schedule. Okay, let's prepare this debtors collection schedule. So this is the answer sheet. So when you are preparing the debtors collection schedule, you only need the credit sales. So for the debtors collection schedule, you only work with the credit sales. So let's find those credit sales. So it's July, August, September, October. Now let's find the one of July. So you can see the sales that are given. So let's calculate the credit sales. So for July, we're going to say 95,200 multiplied by. Now, they said that 25% of total sales is the cash sales, meaning that the another 75% is for what? Credit sales, because that 25% is for the cash sales. So multiply by 75% because we want to get the credit sales. So 95,200, 7.5, that is equal to 71,400. Those are the credit sales for July. 71,400. And then now August. For August, yeah, 89,600 multiplied by 75%. 9,600 divided by 75. That is 67,200. 67,200. And then for September, it is 112,000. 112,000 multiplied by 75%. That is 84,000. And then for October, 82,680 multiplied by 75%. 62,160. So now we have the credit sales. Now let's see how these debtors pay the business. They are saying that although debtors are expected to pay within 30 days, payment trends show that. So they are showing that 30% pays in the month of sale. Now let's come and draw this table. Let's draw it this side. Let's draw this table. That's 1, 2, 3. So it's for 12%, 55%, and a 30%. So here we're going to put month. 30% pay in the month of sale, 55% in the month following the month of sale, 12% pay 2 months after the sale. Now, let's start with July. Okay, let's start with July. Let's say July is a month of sale. Let's say July is a month of sale. So if July is a month of sale, it means that 30% will be paid in July because they said that 30% in the month of sales. And then after July, we're going to have the month following July is going to be August. And then after August is going to be September. Okay. Now we're moving to August. So let's say that August now is a month of sale. So if August is a month of sale, it means that 30% will be paid in August. Then after August is September and then October, right? Now let's move to September. So if September is a month of sale, it means that 30% will be paid in September. Then after September, it's what? It's October. Then November. Okay? And then we have October. So if October is a month of sale, it means that 30% will be paid in October and then 55% in November, then December. Okay, now the debtors collection that we are doing for September and October. We are only doing a debtors collection for September and October, right? So we're doing for September and October, September, October, October. So we're doing for these months. Okay, let's start here in July. So for July, you can see that this is already calculated the September. It's already calculated. So, but we can just show that how did we get this 71,400. Okay. Okay. Now let's go to August. in August, when August is a month of sale, 55% will be paid in September. So it's already calculated. And then 12% will be paid in October. 12% will be paid in October. So this means that we are going to say that, and this space is small. So let's just do it here. 67,200 multiplied by 12%. 67,200 multiplied by 12%. It is going to be 8,064. That is for October. 67,200 multiplied by 12%. Okay. Now we're done with August and July. Now we're moving to September. Okay. September. 30% will be paid in September. So for September, 30% will be paid in September. Right? So we're going to say 84,000 multiplied by 30%. Right? 84,000 multiplied by 30%. It is going to be 25,200. Right? And then still in September, 55% will be paid in October. 55% will be paid in October. So 84,000 multiplied by 55%. 84,000 multiplied by 55%. That is going to be 46,200. 46,200. Now the last one, October. So for October, 30% will be paid in October. For October credit sales, 30% will be paid in October. So just going to say multiply by 30%. So 62,160 multiplied by 30%. This is going to be 18,648. Right? Yes. Then we are going to add them plus 46,200 plus 8,064, which is going to be 72,912. Then for October, 8,568 plus the other 6,960 plus 25,200 is equal to 70,728. Okay. Now we are moving to the debtors collection schedule. Now, we are moving to the cash budget now because we are done with the debtors collection schedule. Now, in the cash budget, we are going to have the receipts from debtors, which are coming from the debtors collection. Receipt from debtors. So for September, it is 70,728, and then for October, it is 72,912. Okay. Now let's continue. Now we are done with this. So in this answer sheet, the cash sales for September they are given, but then the one for October they're not given. So let's find the cash sales of October. So for October we are given the sales, they are 82,880 multiplied by. So these are the sales, right? So we know that 25% of total sales is the cash sales. So we're going to say multiply by 25% because we are looking for the cash sales. So 82,880 multiplied by 25%, that is going to be 20,720. Those are the cash sales for October, 20,720. Okay, now let's continue. Okay, so letter B, trading stock. The business uses a constant markup of 40% on cost, meaning that cost price plus markup is equal to selling price. So the cost price is always 100%. The markup is given is 40%. So cost price plus markup is equal to selling price. Right? Let's continue. A fixed base stock is maintained, meaning that whenever the business is selling the trading stock, the business will replace that stock in the same month. Okay? Whenever the business is selling the stock, the business will replace that stock in the same month. Okay? Even if it's the stock has been donated, even if the owner withdrew the stock for personal use, still the stock needs to be replaced. So that is a fixed base stock system. It says that so whenever the trading stock has left the business needs to replace the stock. So how does the business replace the stock? The business will need to buy another trading stock. Okay, now let's come back here. Okay, and then you are told that 50% of stock is paid in cash, meaning that another 50% is credit, right? Now, let's come back here. So these are the sales, meaning that the trading stock was sold, right? This means that the trading stock was sold. So what does the fixed base stock system say? It says that whenever the business has sold the trading stock, or whenever the business has donated the trading stock, the business needs to replace that stock. Okay, the business needs to replace that stock. So let's go and replace the stock. So, but then we need to find the cost price because the business buys the trading stock in the cost price and then it will sell it at the selling price. Okay, for September, it is 112,000. 112,000 multiplied by, so we are looking for the cost of sales. So we have 140 and 100. So below we put what we have. So what we have is the selling price. The selling price is 140 because these are the sales, so which is the selling price. And then above we put what we don't have or what we want. So what we want is the cost of sales. How much is that? 112 multiplied by 100 divided by 140, that is 80,000. So this means that the cost of sales are 80,000. So this means that in September, the business is going to buy a trading stock that is worth 80,000. But then, when the business buys a trading stock, the business buys 50% of it using cash and then 50% using the credit. So this means that we are going to have a payment for the cash purchases. Oh, for September, it's already here, so there's no need. And also the payment to creditors, they are already given. Okay, now, so we were just going to say, just going to say 80 multiplied by 50%, and then we're going to get that 40,000 for the cash purchases. So it's already given. Okay, so we have the cost of sales, which are 80,000 for September, and then creditors allow credit of 60 days, but allow a 5% discount if outstanding balances are settled after 30 days. The business always take advantage of this discount. Okay. Now, what does this mean? This means that what the business does, um, the business pays its creditors after 30 days. Okay, the business pays its creditors after 30 days. So this means that because the business is going to cycle, because the business is going to buy the trading stock for 80,000 in September, and then 50% of it is for credit, 50% is for cash. So this means that the business will pay the creditors for this trading stock, 80,000 multiplied by 50%, that is equal to 40,000. So another 40 is for cash, another one is for credit. So another one is already given here, right? It's for the cash purchases. And then the 40,000 for credit. This means that the business is going to pay the creditors in October because they are saying that, but allow a 5% discount if outstanding balances are settled after 30 days. So this means that the business will pay the creditors in October for the credit purchases of September. And then they are saying that they will be giving a 5% discount. The business always take advantage of this discount. Okay, so this come, so it's going to be 40,000 multiplied by 95%. We are separating the discount for 40,000 multiplied by 95%. It is going to be 38,000, right? Now let's calculate the cash purchases of October. Cash purchases of October. So let's calculate the cost of sales for October. It is 82,880 multiplied by 100 over 140 is equal to 82,880 multiplied by 100 divided by 140. That is 59,200. 59,200. These are the cost of sales of October. So this means that the business will need to, because the business sold the trading stock in October, this means that the business will need to replace this trading stock in October again. So meaning that the business will need to buy the trading stock. So when the business buys the trading stock, 50% is for cash and then 50% is for credit. So this means that from this 59,200, we are going to have the cash purchases of 50%. We are going to have the cash purchases of 50%. How much is it for October? 59,200 multiplied by 50%. It is going to be 29,600. Okay, let's continue. The next one. Let us see. Expenses amount to 8,600 per month, but are expected to increase by 5% from the 1st of October. Now, per month, they are 8.6. It's already given here. And then from the 1st of October, they will increase by 5%. So we're just going to say multiply by 105%. Or you can just say 8.6 multiplied by 5% increase. 8.6 multiplied by 5% increase. It is going to be 430. Then we're going to add this 430 from 8.6. So it's going to be 9,000 So you can see that it's going to be the same amount, 9,080. Okay. Let's just see. Salaries and wages total to 384,000 per annum. So because we are doing the cash budgets for each month, it means that we need to divide this by 12. 384,000 divided by 12. 384,000 divided by 12. It is going to be 32,000. So this means that the salaries and wages per month, they are 32,000. Okay. Then they are saying this. Employees are entitled to a 6% increase commencing in October. So from October, the salaries and wages, they will increase. So the salaries and wages also, they must be under cash payment. So we are going to have, so the increase will be from the 1st of October, right? So this means that in September, the salaries and wages, they are going to be 32,000. But then from October, they will increase by how much? They will increase by how much? 6%. So this means that you're going to say multiply by 106%. So 32,000 multiplied by 106%, it is going to be 33,920. Okay. The next one, E. Motor vehicles expenses are allocated as 12,500 per month. This includes depreciation, which amounts to 2,500 per month. Okay. Motor vehicles expenses, they are how much per month? They are 12,500 per month. So we need to remember the cash budget includes only the cash items. So they are saying that these motor vehicles expenses, they are including a depreciation, which is 2.5 per month. So this means that because we know that the cash budget includes the cash items only, we must subtract the cash budget. We must subtract the depreciation. We must subtract the depreciation because it does not involve the movement of cash. So we're subtracting the depreciation. So 12.5 minus 2.2, 2.5, that is going to be 10,000. So the motor vehicles expenses, they are 10,000 per month. And then we are moving now to the next one. Letter F. The business has a loan of 240,000 at VW Bank at an interest rate of 12% per annum. Okay. The monthly interest is paid on the 25th of every month. Take into account that 40,000 of the loan is due to be paid on the 1st of October. Now, interest on loan, this is also a payment. Interest on loan, and then we also have a loan repayment. We are told that this repayment will be when this repayment, it will be on the 1st of October. So this repayment will be on October here. Right now, the loan is amount of 240,000. Right, 240,000 multiplied by 12%. Okay, so let's calculate for September. Multiply by 1 over 12. 240,000 multiplied by 12%. multiply by 1/12 because we're calculating for September. $240,000 multiplied by 12%, multiplied by 1 divided by 12, it is going to be 2,400. Right? So it's 2,400 the interest on loan on the first of, on September. But then from October, the loan is going to decrease. So the loan was 240, but from October it's going to decrease by 40,000 from the 1st of October. So this means that for October, we are going to calculate the interest from the 200,000 because it is no longer 240, it is now 200,000. So multiply by 12%, multiply by 1 divided by 12, which is equal to 200,000 multiplied by 12%, multiplied by 1 divided by 12 because we're calculating for only 1 month. That is going to be 2,000. So it is now 2,000 per month. Okay. The next one. An investment is due to mature on the 1st of September 2001. The business is expected to receive this amount together with an interest of 15% per annum for the last 2 months in September. Okay. Let's go and check that fixed deposit. So it's there in the cash budget. It's already given here. This fixed deposit is how much? 80,000. So we are told that this 80,000 is expected. This investment, which is a fixed deposit, is due to mature on the 1st of September. So that is why they are showing it here, because it has matured, right? But then we are told that the business is expected to receive together with an interest of 15% per annum for the last quarter. For the last 2 months in September. So multiply by 2/12 because we want the interest of 2 months. So 80,000 multiplied by 15% that we're going to receive, and then we are going to receive the one for 2 months. That is going to be 2,000. So the interest on fixed deposit, in September is going to be 2,000 rand, right? Let me calculate again. 80,000 multiplied by 15% multiplied by 2 divided by 12. Yeah, it's the same amount. So October, there is no interest because it has matured, the fixed deposit. Now let's calculate the total receipts. For September, 28,000 plus 80,000 plus 728 plus 2,000 is equal to 180,000 728. Okay, and then for October, 2720 plus 72,912, which is going to be 93,632. Okay, now the total payments for September, 40,000 plus 80, 400 plus 8.6 plus 32,000 plus 10,000 plus 2.4, it is going to be 123,400. Okay, then now for October, 29,600 plus 38,000 plus 9 and 30, 9 and 30, 33 and 20, 10,000 and 2, 10,000 and 2,000 plus 40,000 is going to be, that is not possible, 500,000. There's a mistake here. Let's calculate again. 29,600 plus 38,000 plus 9,000 and 30 plus 33,920 plus 10,000 plus 2,000 plus 40,000. 162,550. 550. Now, okay. And then letter H is saying that the bank had a credit balance of 4,288 on 31 August 2021. On 31 August 2021, there was a credit balance, right? So, meaning that is going to be the bank opening balance in September. That is going to be the opening balance in September. A credit balance of 4,288. So because it's a credit balance, it means that it's a negative balance. Okay, now let's calculate. So receipts minus payment, 180,728 minus 123,400. It is 57,328 minus this one minus 4,288, which is 53,040. So which is going to go as the opening balance here. Now for October, 93,000 payment, receipt 632 minus payments 162, 550. It is going to be negative 68,918. Right? So it's negative, we put it in brackets, right? So negative plus 53 and 40 is going to be negative 15,878. That is your cash budget.